The Little Book of Common Sense Investing. Explain this book chapters. The Little Book of Common Sense Investing, by John C. Bogle, is a concise guide that promotes the principles of passive index fund investing. Here is an overview of the book's chapters. Chapter 1, Big Mistake, Huge Lesson. Bogle begins by discussing the pitfalls of active investing, highlighting the impact of high fees, poor fund performance, and the difficulties of consistently beating the market. Chapter 2, The Cost Matters Hypothesis. This chapter emphasizes the importance of minimizing investment costs. Bogle argues that high fees erode investment returns and explains how expenses associated with active management can significantly hinder long-term wealth accumulation. Chapter 3, The Grand Illusion. Bogle explores the illusion of superior fund manager selection. He examines the data on active fund performance and demonstrates that only a small fraction of fund managers consistently outperform their benchmarks over the long run. Chapter 4, Taxes or Costs, 2. Here, Bogle discusses the impact of taxes on investment returns. He explains how active trading within mutual funds generates taxable capital gains, which can reduce an investor's after-tax returns. Bogle advocates for a long-term, low-turnover investment strategy to minimize taxes. Chapter 5, When the Good Times No Longer Roll. This chapter addresses the cyclicality of investment performance. Bogle explains how investors tend to chase recent winners and suffer from poor timing, leading to lower returns. He encourages investors to adopt a disciplined approach and stay committed to their investment strategy. Chapter 6, Selecting Long-Term Winners. Bogle argues that selecting individual stocks or actively managed funds based on past performance is an unreliable strategy. He presents evidence to support the idea that index funds, which aim to replicate the performance of a market index, offer a more consistent and reliable long-term approach. Chapter 7, Yesterday's Winners, Tomorrow's Losers. Continuing the discussion on the limitations of chasing past performance, Bogle explains how the best-performing funds of the past often fail to sustain their outperformance in the future. He highlights the importance of diversification and long-term thinking. Chapter 8, Seeking Advice and Finding Value. Bogle explores the value of financial advice and its impact on investment returns. He cautions against high-cost financial advisors and recommends seeking out low-cost, fiduciary advisors who prioritize their clients' best interests. Chapter 9, Keeping Costs Low. This chapter provides practical guidance on minimizing investment costs. Bogle explains the benefits of investing in low-cost index funds, such as exchange-traded funds, ETFs, or traditional mutual funds. He also discusses the advantages of dollar-cost averaging and the importance of asset allocation. Chapter 10, The Battle for the Soul of Capitalism. Bogle concludes the book by discussing the broader implications of common sense investing and its potential to align the interests of investors and corporations. He emphasizes the importance of corporate governance, transparency, and responsible stewardship of investors' capital. Throughout the book, Bogle advocates for the simplicity and effectiveness of passive index fund investing, emphasizing the importance of broad diversification, minimizing costs, and maintaining a long-term perspective. He presents a compelling case for investors to focus on capturing market returns rather than attempting to beat the market through active management.